Hello traders, Jason here from Leavitt Brothers. In today's video, I'm going to talk about entering trades with moving averages on shorter time frames. Often we see a great trade setting up on the daily chart, but we aren't quite sure how to enter. So this is what I'm going to talk about today. First, quick reminder, my masterclass in trading is now live. 200 lessons, 17 hours worth of material. It's the class I wish I had when I started. Heck, it's the class I wish I had after I got going. Because it would have fine-tuned some of my rough edges and taken me to a much higher level. So check it out. It's at a link below this video. All right, let's get started here. Okay, so we're going to talk about entering trades on shorter time frames. So here's UAVS. It had been doing really well. You can see a breakout here from a bottoming pattern. You can see all the volume here. Stock then traded kind of a cup and handle pattern here. And we got another breakout there. So then the stock rallied up hard and came down and was now at its 21 EMA, which was supporting the stock. It kind of supported the stock here. So the question was, are we going to get a bounce here? Besides the EMA, it was close to the resistance level from back here. And if we get a bounce, how are we going to enter? So this is what happened. This is the daily chart. The very next day, and you're going to look over here, you can see the next candle. The very next day, it does that. Okay, so it opens up here, which is higher. It tested lower, and then it moved up all the way to 12, and then it came down and closed right here. Okay, so that's a really nice intraday candle. So the question is, let's zoom in on a 5-minute chart and see how we can enter this trade. So here's the 5-minute chart. Okay, stock gapped up here, came down. Notice I used the moving averages here. The 8 is the cyan line, the very light blue line, and the 21 is the orange line. So notice it opens up strong, pushes a little higher, but then drops below the moving average. You can see the 21 comes in here. So as long as the stock is trapped underneath that moving average, I'm not going to be interested. Okay, I would like the stock to get above that moving average. It finally gets above the moving average here, which an aggressive trader could get long there. The stock then moves up, and watch how it moves sideways for four candles. So it's like 20 minutes. It moves sideways into the 8 EMA, which is right there. And then the stock takes off, as you can see. Okay, so relatively simple. Okay, you don't have to guess. The stock was on your radar when the day began because it had come down to the daily 21. And then on the 5-minute chart here, as long as it was basing here, that's good, that's constructive, that's healthy, it's doing fine. And when it gets above that 21, it's in play. Okay, and then you're looking for an entry. You could have either gotten in here or wait, and sometimes you get a pullback to the moving average, or in this case, we got sideways movement into the moving average, and then you can see that it took off. Okay, so it's not a guessing game. You don't have to close your eyes and just buy. The moving averages give you a frame of reference. They give you like a reference point to judge the stock by. All right, let's go to another example. Here is Atom. Okay, nice basing pattern in here. Breaks out on strong volume. Trends up. Moves up. It's been a really good performer. Okay, so we put it on Leavitt Brothers put it on our list this past weekend as a possible buy. Within a dip, you can see that it's forming a support level there. So if the market was going to be weak, maybe we get further downside to the 21 here. But if the market bounced, which is what happened, you'd probably get a bounce off this moving average. So let's see. This is what happened. Okay, you can see that new candle here. The stock opened up with a gap up. It tested lower, then it rallied up, and it looks like it closed pretty much at its high. So the question is, how do we play this candle? Let's zoom in with the 5-minute chart and see how we could have played that candle. All right, so here's the 5-minute chart. Okay, stock opened up strong. You can see that it dropped pretty hard, relatively speaking, below both the 8 and the 21. It gets up here. It comes up here and it gets above the moving averages. You can see that 8 offers support here. Okay, so that's a good sign that it drops, but then it recovers and it starts getting comfortable under the moving average. Then it moves into this sideways period here. And this is really constructive. Okay, so stock dropped, recovered, moved sideways for, what is this, 1, 2, 3, 4, 5. It's about 10 candles, so 10 5-minute candles. It's almost an hour. Moved sideways into the 21 EMA there. finds some support at the 8 EMA there, and then as you can see, it continues on, and the 8 pretty much supports it all the way until you get just after lunchtime. So again, you don't have to guess. It doesn't have to be a mystery. You don't have to close your eyes and just buy. You don't have to be stressed out. Use moving averages to give you a frame of reference. Okay, establish a system where I want the stock to be above a certain moving average. I want it to get above a certain moving average and come down and test it, because then you have an easy place to put a stop. All right, another example. Here is DVAX. Okay, this was on our list this past weekend. You can see the stock broke out the week before on big volume. Then it came up and traded in this consolidation area. So this is picture perfect. Okay, if you have this like long drawn out base here, you got some volume surges within the base, and then the stock busts out on huge volume and then forms a consolidation pattern with lots of open space overhead. So this is like a perfect bottoming pattern that you'd want to play. Okay, the very next day it did this. Okay, so this was yesterday. It broke out, opened here, tested a little bit lower, and then posted a huge gain. Went almost up to 12 and then came back down to the low 10s. So let's zoom in with the 5-minute chart and again see how we could have played this. Okay, because it's frustrating. Say this was on your list and then it gaps up and you're thinking, over here last Friday, the stock closes at like 6:30, and then yesterday the stock opens at like 7:40 or something like that, and that's frustrating. And it's frustrating because that's big, and then you're wondering, and then if it takes off too fast, you're wondering how the heck am I supposed to play this thing? So let's zoom in with the 5-minute chart and see how we could have played it. So here's the 5-minute chart. Stock opens up strong here. Notice that it moves sideways into the 8, moves up a little bit, sideways into the 8, moves up, and then it moves like sideways into basically 21, comes in here. Okay, and then it rides it up, comes down and tests the 21 here, and then goes up again. Okay, so if you look at the daily, you wonder how to play it because it just gapped up, tested a little bit lower, and then it just took off, and it was a massive, massive, massive winner at some point. I mean, it finished the day up 62%, but it was probably, I don't know what it was at the top, but probably 70-80% at the top. And you're wondering, how do I play that? Well, here you go. Use a couple moving averages, wait for the stock to either move sideways into a moving average or come down and test a moving average. There's your entry, and then there's also your stop. Okay, so you're risking very little for the potential that you have a strong stock that's doing really well, that's going to continue going in the direction it's moving. All right, another example. Here's FuelCell. This is a stock that we've played at Lever Brothers several times. Long drawn out base, huge volume on the breakout, then to trade in this consolidation pattern. Okay, broke out here at 10, went up to 14, came down, tested the 21 here, which was also the former resistance level, and also it was 10, which is a big fat whole number, so it comes into play. Rallied up, and then stock came down, formed this consolidation pattern. So we've played this a couple times. We played it here, and then it was reprofiled at Lever Brothers over here. Okay, stock broke out, and this was the chart coming into this week, and you're thinking like, well, how do I play this? So if the market was going to be weak, then maybe we get a further move down to the 21. But with all these up and down candles here, that's kind of ugly. With all those up and down candles, that are like $1.50 or $2 in size, there's definitely some intraday trades that can be had even if the stock trades in place. Okay, so this is what happened yesterday. Okay, you can see the stock opened up, gapped up here, tested lower, and then rallied back up and closed near its high. So the range here is like $2. It's almost 10%. So that's definitely a tradable range that you can play. So the bias is to the upside because you got strong trend, you got lots of positive volume down here. So dips within a range are definitely going to be buyable or could be buyable for day trade. So let's zoom in with the 5-minute chart and check it out. So here's the 5-minute chart. Stock gaps up here, drops pretty hard, comes up here, gets rejected by the 50, comes back down, and this time it gets through the 50 and then it consolidates for 1, 2, 3, 4, 5 candles. Here's the 50, the 21 is here, the 8 is here. So it moves up and then it gets comfortable for 5 candles above these key moving averages, and then it takes off again. Okay, so there's a trade in there. Unfortunately, it didn't work that great initially because, you know, if you want to nail a bigger move, you can't get shaken out just with some of this movement. So you end up making a little bit of money because eventually you got to get out because if it's just a day trade. But then the stock moves down. Notice here you get resistance from the 8 and the 21. So when it gets back above those moving averages, there's another entry, and this second one worked out much better. And even if, you know, this, you know, right here is 21.25 and this is ends the day 21.90, that's, you know, for a day trade, that's not bad. That times a couple thousand shares, and, you know, you're making a pretty decent living as a trader, or you're making a pretty decent side income as a trader, just with a simple setup on an intraday chart when you first get your bias from the daily. All right, one more chart. Here is Tiger. I'll call it Tiger. So we got a basing pattern. Stock ramps up here, strong volume, comes down in bases. We got a nice, you know, these are great patterns. It's like this kind of a cup pattern. Then we get another smaller cup pattern here with a resistance level. It takes off, rallies, you know, day after day after day, huge volume here. Okay, so coming into this week, it looked like this. Okay, so maybe if the market stays weak, we're gonna get a pull back to the 21. But if the market is strong, we're probably gonna get, you know, some back-to-back candles over here. So let's see what happens. So this is what it was coming into this week. Then this happened. Stock gapped up, tested lower briefly, and then had a super big day, 18.5% day. So let's zoom in with the 5-minute chart and see how it could have been traded. So here's the 5-minute. Stock opens up strong here, pushes higher, comes down, tests the orange line, which is the 20, which is the 21, comes up here. Notice it gets support from the 8 here, support from the 8 here. We get a resistance line there, and then the stock continues on. Okay, so if I were to repeat that, you have stock pushes higher, comes down, comes back up, consolidates for 3-4 candles and forms a resistance line here while the 8 comes up and supports it, and then it gets pushed out the upside, moves up, kind of comes over to the 8, rides the 8 up, comes over to the 21, and then rides the 8 up again. Okay, so simple charts. I get a bias from a longer term daily chart, and then I can zoom in with either the 5 or the 15, and I use a couple moving averages, most of the 8 and the 21 and the 50, to give me a frame of reference on how to judge it. So I look for support and resistance. I look for the stock to move sideways into a moving average. I look for a stock to move down to a moving average to give me an entry, and those actually also give me stops. Okay. Thanks for listening. And again, check out my masterclass in trading. I teach this in my masterclass. I teach many different trading strategies with many different moving averages and with many different technical indicators, I should say. And since moving averages are one of the main ones I use, I definitely do a really good job covering those and different strategies I use. So check it out. And again, thanks for watching, and I'll see you next time.